Have you guys considered stretching out the financing terms on your auto business? You talked about earlier, consumers don't necessarily look at the sticker price they're paying. All they're concerned about is monthly payment.
Right.
And one of the fundamental advantages of an EV is that it's substantially more durable. And so would you guys ever consider stretching terms out to 10 years, especially in this rate environment, given the shape of the yield curve? You know, extending the terms out that farther, you'd actually be capturing a lower cost of funds.
Yeah, I mean, the important thing to appreciate is that, like, that the vast majority of the financing is from banks. So it's kind of whatever the banks are prepared to do. I mean, this year, I guess we'll do on the order of $100 billion of sales. And we don't have $100 billion in cash to finance that. So the vast majority of it has got to come from, from banks. So it's really the bank's choice of what they're willing to do. And it has been tricky with banks recently because, as I mentioned earlier, if you're a bank and you're not sure whether you're going to be alive or not, it's a pretty big distraction, and increasing your auto loan portfolio is very much a secondary priority. So it's just important to appreciate it's not up to Tesla, it's up to the banks. And there's not some easy solution where you can say have a so-called a captive financing arm, et cetera, because you have to securitize those loans. And the market for securitizing them is weak. There is no, I wish there was an easy path, but there isn't. So, I think it's just important to remember that the economy moves in cycles. And we've had a very long period of upcycle. The next 12 months will be, I think, difficult for everyone. And I think, when Berkshire Hathaway had their annual meeting, Warren and Charlie actually said, like, hey, this year, the Berkshire companies are going to make less money. They're very well-run organizations, and I think that's just generally true for the economy. So, it's also important to remember that, there are good times and there are dark times, but then the good times follow the dark times. So, my advice would be, don't look at the markets for the next 12 months. If there's a dip, buy the dip. And I think you will not be sorry because, there's just generally a sort of there's an economic cycle to things, but things come back up. So my guess is tough times for a year. Like I said, just my guess. But then Tesla will emerge stronger than ever, and the long term, if you say like net present value of future cash flows, will be incredible, in my opinion. All right.